bring on Bryan Freeman, the executive chairman of Real Good Foods, and go into our next presentation. Bryan, thank you so much for being here. How are you?
Hey, glad to be here. Nice to see you, Michael.
It's a pleasure to have you here, Bryan. Let's start things off. Give us a profile of the company. What does Real Good Foods do?
Yeah, it's really pretty simple. We participate in the frozen food category, which is a $58 billion category. It grew at about a 6% CAGR over the last 3 years. And what's interesting is when you walk the frozen food aisle, it's convenient, it's growing. However, there's not a lot of food in there that's really good for you. And so our brand position is really simple. Make really delicious, craveable products that are low in carbohydrate, have very little sugar, and lots of protein. So when you think about like an enchilada that has only 2 grams of carbohydrates and 22 grams of protein, that's Real Good Foods. And so it's because of that, just making craveable food that is actually good for you is why why we've grown so quickly. I will say this, I mean, when you think about our TAM, think about folks who are unfortunately have diabetes. The CDC will tell you that there's 1/3 of the US population is either pre-diabetic or has diabetes. 57% of all US adults try to reduce their carbohydrates. To me, the problem is I'm always going to want to eat lasagna or Mexican food or whatever. I just can't get away from it. So our job is just make it really craveable, get the sugar and carbohydrates out, put the protein in, and you'll have a large business very quickly.
Amazing. Okay, so there's a lot to dig into here, and I want to talk about all different parts of the Real Good Foods business, and there's certainly a lot of topics we want to cover. But do you find it difficult to make inroads in an industry with the frozen foods and what Real Good Foods does? It's a space that not necessarily dominated by a lot of larger brands, but there's a lot of companies in this space, and certainly the food industry is one that has a lot of big names in it already. Do you find it difficult to make inroads, especially with the stated mission that your company has to bring better foods and healthier foods to the market? Do you find it difficult to take market share there with so many big names in the space already?
I think if you're a first timer in the industry, it is because to your point, there's 4 multinational strategics that really have done a roll up over the years and dominate the space. Good news is they tend to buy innovation. They're not, they don't go out and do the things that a company like Real Good Foods does. I've been in the frozen food space for over 20 years. We've got an executive team that have built billion-dollar companies. And good news is our products are growing really fast because the large multinationals are not as innovative as us. So, high barrier to entry to first timers because of the consolidation, but it also presents a huge opportunity for Real Good Foods. Less than 5 years ago, this business was doing maybe $500,000. And in our last quarterly call, we raised guidance for a 3rd consecutive quarter. We're guiding for 2022 revenue to be between 155 million and 160. We just opened a new plant outside of Chicago in Bolingbrook, Illinois, that will provide an additional 200 million of capacity. So the business is well positioned. We also, as I just mentioned, we make our own products, which is important for margin improvement and to be competitive in this industry.
Outstanding. Okay, I'm glad you mentioned Bolingbrook because we're going to talk more about that as well. But I also want to talk through your personal background too before we get into that, because you mentioned, if you're a first timer in the industry, maybe being more difficult. But take us through your background, how you came to Real Good Foods, and how you got into this place in the beginning.
Yeah, sure. So I've built 3 businesses, sold them to one of those large strategics in the past. With Real Good Foods, just prior to it, I was part of the leadership team over at Advanced Pierre Foods. We took that company public, achieved a $2.2 billion market cap, and then 15 months later, Tyson bought us for $4.2 billion. So that was in 2017. And it was at that time that I learned about Real Good. I saw the brand, I saw its positioning, I saw the market need, and myself and several other folks from Advanced Pierre came over to Real Good. At the time, like I said, Real Good was doing maybe $500,000 D2C, and we came over and scaled the business rapidly. But I will say this, I mean, we feel internally, we're just in the 1st or 2nd inning of this thing. Our stated goal and our view is over the next 3 to 5 years, we can get this to $500 million in revenue. We've got the products, we see great velocities and consumer repurchase rates. We think we can get this to over $500 million of branded business in the in the U.S., Canada, Mexico. By the way, got to give a plug here. This product's available in Costco. Go out and get one and try our products. We really think we're having an impact on our country and just trying to make more nutritious, healthy food.
Terrific. Okay,
you like that
let's
plug,
start.
Michael?
I like that plug. I like it. You had it ready to go. I love that. That's perfect.
I got a whole stack of these things over here. No,
that's great. I love it. We love props. Bring them in. We love that. Take us through the business a little bit more then, right? Let's dive into, I want to talk about the e-commerce platform and what you guys are doing there, but the rest of the business as a whole, how do you get your products out there to market? Are you relying mainly on the e-commerce platform? Is it direct to distributors? Is it direct to companies? How do you guys get your products to market and in front of consumers?
Sure. So we sell directly to retailers and the club channel. But the digital piece is really important. I'd welcome your viewers, your audience, to check us out on Instagram at Real Good Foods, and you'll see that we have the largest social media following in all of frozen food. We have more followers and more engagement than all brands, all frozen brands owned by Nestle and Conagra combined. So our social media is our community is a big part of our secret sauce. And they're the folks that really drive demand to shelf. And the other piece to that is, over 20%, sometimes 30% of all revenue generated at the retailer first started on a screen, whether it was on the retailer's website or, our website. So, when you compare that to other frozen food brands, it's in the single digits. So, we're helping retailers connect the physical world with the digital world. That's how brands are being built today. And we're really proud of the engagement that we have in social media.
Awesome. Okay, great. We have that context. I want to dive into the Q2 earnings report and start talking through some highlights there. Give us a high-level overview, anything that stands out to you. I want to talk about the raised guidance for the last 3 quarters. Very unusual to see. But give us the rest of the highlights of that earnings report. Anything in specific you want to call out?
Yeah, I mean, our gross margins improved significantly from the prior quarter. We reaffirmed that we'd be adjusted EBITDA positive in Q4 and EBITDA positive next year. That is quite an accomplishment for a company that's growing as fast as we are and as young as we are, but we are committed to continue to grow the business, but do it in a profitable way. So really proud of what the team achieved on the gross margin standpoint. But then going back to just the health of the business, we saw our velocities accelerate over 50% over the quarter, and we saw our household penetration at 8.4%. So 1 in 12 U.S. households has our product today. That's number 2 in the entire better for you frozen food category, second only to Amy's. Now, Amy's has been around for over 30 years, and that business, is over $500 million. So for us to have this kind of penetration this early tells me that our brand positioning is resonating with a very broad consumer base. And we have a pretty clear path of growth over the next few years.
Absolutely. So first thing there, let's talk about those raised guidance for the last 3 consecutive quarters. Again, very rare to see that. It's obviously a feather in your cap for what you guys are doing at Real Good. But take us through why you think you have been able to achieve that quickly. Like you said, the market penetration that you've already achieved is very impressive. But what do you think the factors are that are leading you guys to raise your guidance 3 quarters in a row? What's going right that you guys are doing right now?
Well, the brand and our products are resonating with consumers. But the other piece to these younger companies, I think, is management. Management's really important. And, all of us have operated large multi-billion-dollar public companies in the past. And so we understand with our institutional investors and with retail investors that it's important that you do what you say you're going to do, and establishing credibility. We went public in November of last year, and then we saw the market turnover, and we know the guidance is important. I think you see these younger management teams, they might have a good quarter, they get overly enthusiastic, and at the end of the day, I just feel like if we do what we say we're going to do, the stock will take care of itself.
Makes sense. Let's talk about that, the marketing side of the business and everything else. When you look at peers in the industry and other people doing what you guys are doing, how do you feel that Real Good is valued compared to your peers and other competitors in this space? How do you feel that your valuation stacks up against those companies?
Well, right now our valuation is very low to our peers, and I think it's just the fact that not a lot of people know about us, and we just recently went public. So that's why I really appreciate this opportunity, Michael, to try to get the word out. You know, we're kind of a management team that kind of keeps our head down and grinds and just puts results up, and you know, we're getting out there more. The other piece I would say is, you know, we went public regular way with Jefferies, Lead Left, and William Blair, and you know, a few others on the book, and they all have, you know, strong buys, price targets of $14 to $16, and been very supportive. But you know, part of my job is to talk to folks like you to let people know about the potential opportunity with Real Good Foods.
Absolutely. Makes a lot of sense. And I'm glad you guys are getting the word out there and spreading what you're doing. I also want to talk more about some of the other highlights in that earnings report. You mentioned the Bolingbrook facility in the earnings report, talked about production ramping leading into the end of this year. What are some of the other goals for the Bolingbrook facility? Why is it so significant to you guys, first of all? You mentioned it briefly, but take us through why that facility matters so much and then what you're going to do to continue ramping production there.
Yeah, thanks for the question. So Bolingbrook is a scaled facility that we built. It is no one will be able to really outconvert us, in my opinion. You know, we've invested close to $60 million into that facility, and what it allows us to do, it really unlocks a lot of automation. That's number one. Number two, the proximity to our distribution hub is significant. It's literally down the street, as opposed to when we went public, our plant, which I am here today, City of Industry, which is in Southern California. Close to 80% of the products produced in this plant has to get shipped to our hub in the greater Chicago area. So significant logistics savings there as well. So unlocks 200 million of incremental capacity, huge improvement on our labor and conversion rates, and three, significant improvement on our logistics. And then number four, it also allows us to make many of the components to the product that previously we were having to buy from a third-party supplier. As an example, our tortillas that we use for enchiladas, we now make those in-house. It's actually a significant cost savings. So the team continues to drive cost out of the product to improve margins and scale up and be able to match the demand we're seeing for our products today.
Got it. Okay, talking about improved margins and everything else there, take us through the other business part of what Real Good Foods is doing, becoming cash flow positive and breaking even. Do you have some kind of timeline there? When are you aiming to do that? And what do you think you're going to need to accomplish in order to break even and get to that cash flow positive state?
Yeah, I mean, if you look at the analyst model, so basically meet the guidance that's out there, we'll be cash flow positive next year, because we're guiding and signaling that we'll be EBITDA positive next year. So, and then in terms of the current liquidity of the business, we have well over $40 million of availability in liquidity today, and so that's more than enough to get us through probably 2 years of where we're at today. So, I heard on the call, our CFO actually called it a war chest in terms of the amount of liquidity we have. We understand that, we're not looking to raise additional capital through the markets anytime soon.
Got it. Okay, let's talk a little bit about some of the other things that you've done in the business over the first half of this year to the expansion of the breakfast platform. How has the reception been for that so far? Is it still moving ahead? And what do you think the market has said about what you guys did there thus far?
Yeah, so going into this year, we had the number one better for you breakfast item in retail grocery, our low carbohydrate, high protein breakfast sandwiches. Only 2 SKUs on shelf. So our job is to build kind of a brand block. And so we did that by rolling out our new breakfast bowls, as well as our breakfast bites. And so those products are available in, retailers such as Kroger, Walmart, and regional retailers such as Publix. And so we're seeing nice velocities. It's still early days, but we're seeing nice velocity and incremental growth in the breakfast category. I'd say the other two categories with that we're really seeing a lot of success in is on entree category, where we have our enchiladas, lasagnas, both in single serve and multi-serve. And then, the real new news for this year is breaded poultry. If you go and buy, chicken nuggets today, you'll notice that they have a lot of breading on it. They're not really that good for you, high in carbohydrates, sugar added to the product. And we think that mom and families care a lot about feeding their families nutrition. So our innovation is a grain-free, gluten-free, lightly breaded chicken nugget that has far more protein and very little carbohydrates. We just launched that into one of the largest retailers in America, and happy to report that in the second week of our launch, we are the #2 highest velocity item of all better for you, poultry items, and in the top quartile of all frozen poultry and meat, competing with folks like Tyson and Purdue. So we really like how the product is coming off shelf to begin with, and it's a huge market. I mean, that market alone is a $3 billion category. High velocity, 3 to 4 times our base velocities in the breaded poultry market. We like our chances there. We think it could be a significant growth driver in 2023.
That's great. Okay, and we're obviously getting into the close here, so that's the last part I want to focus on is the addressable market growing for Real Good Foods. How big do you think the market could be? Do you see us continuing to increase in this, especially with the healthy eating trends that we see and everybody looking for healthier alternatives when they're eating, right? Not just getting food that works, but getting food that's actually good for them and works for the consumer. Do you see this addressable market growing, and how do you plan to continue getting that market penetration? You've had increased market penetration that you mentioned in your earnings report earlier this year for households and consumers. Do you see that continuing to grow, and what do you guys need to do and add to the business in order to continue growing and addressing that larger market?
Yeah. So again, frozen food is $58 billion, growing at 6%. Health and wellness is actually only 11% of the $58 billion today. That's far less than the rest of the grocery store. Rest of the grocery store health and wellness products are 23% on average. So we expect health and wellness to grow at a faster rate than frozen. But having said that, from my point of view, we're still a very small business, but yet with a huge TAM. And so our job is to just get more distribution. When you look at Amy's as an example, they have over 900,000 points of distribution. Real Good Foods today only has approximately 150,000 points of distribution. So still really early days for this business. If and what you see us kind of doing right now is growing our distribution. We can do that because our velocities are so strong with retailers, and continue to provide products that delight our community. So huge runway to go, and that's why we've publicly said our view is this should be a $500 million business in revenue in the next 3 to 5 years, and that's our goal.
Outstanding. Well, Bryan, it's been a great conversation. We're certainly excited to see where you guys go next. Love the plug that you brought into repping your brand and everything else. We love having that here, but thank you so much for joining us on All Access. It's been a pleasure.
Thank you, Michael. Nice to see you.